Hi, this is Alessio. Hope you're well. So I want to give you a very quick update on the situation with Tesla stock. So we'll have a look at the chart of Tesla and see what the chart here is telling us likely on based on the recent breakout. All right, guys, join me. Alright guys, welcome back. So before we dig into the chart of Tesla, there's a lot of things I want to show you here on this particular chart and also where potentially we may be going, so I'll take a look at it in a few minutes. Before we do that though, let me just give you a quick recap on what I said in my previous video on the 17th of May. And this is a screenshot. So I paused my video from the 17th of May, so I can just show you this. And all I said in that video, very simply was, we need to see a breakout to increase the probability and confirm the view that the C wave of this ABC correction has bottomed. That's all I was waiting for. So essentially this is the level I pointed out here at about 180 and this regression channel. In fact, what I'll do for you is, let me just play for you a short clip, a very brief clip of my video from a few weeks ago, and we'll come back. I actually think the odds are increasing that Tesla is likely bottoming in the C wave of this ABC correction. All I'm waiting for is that final confirmation. Break, I want to see this level break. This level I just mentioned, about 177, 180. Once we get a break and a close above these levels here, that actually could significantly increase the likelihood that Tesla has bottomed here and we could start the next major wave higher. All right, guys, welcome back. Now, I don't want to repeat everything I said in that video, but all I want to point out here is this. The reason I was waiting for a breakout to confirm my view was because there was a risk. There's always a risk the C wave may potentially extend a bit lower and make a lower low into this region here. But I needed the confirmation above the regression channel to give us the higher probability. Okay, so here's the chart of Tesla. And as you can see here, Tesla finally gave us that breakout. You see right there, above the 180, 177 region there. That's the candle bar that broke 180. And that was all we needed to give us the extra confirmation, extra degree of probability that the C wave of this correction has likely bottomed. Again, as I mentioned, this is a likely A wave. For those of you who follow Elliott wave theory, A wave, B wave, C wave. So in my view, once Tesla took out that resistance, the regression channel resistance above 180, that was all we needed to give us the increasing probability that the ABC correction, that was the C wave of this correction, has likely bottomed and we're starting the next major wave up. And by the way, as you may recall in that previous video, I mentioned that it's quite likely this is a likely wave 1, a larger degree wave 1, the C wave of a wave 2, the larger degree wave 2, and this is likely beginning the larger degree wave 3 with much higher levels to come. So that's my view from an Elliott wave perspective. In other words, the long-term bullish perspective, because of what I'm seeing in the technology sector. We've broken above resistance, as you see here, above 180. Let me just show you. So we've broken that 180 level resistance. Beautiful. Above the regression channel. And we've now also taken out this trend line, another trend line resistance taken out here as well. So in other words, keeping it simple, resistance is now support. Okay? So that means Tesla must protect. This is very important, but by far the most important part of the video is this part. If Tesla is going to show to us and prove to us that we're in a wave 3 of an uptrend, then it must stay above 193. I know I'm repeating this point, okay, but that's because it's so important. It must stay above this trend line, this yellow line, and above this 21 EMA, the 21 daily moving average, which is now at 193, and above this level, this yellow level that you see, this dotted line, 193. As long as Tesla stays above this, then I can maintain the higher probability base case expectation that, yeah, we're going to go higher to our next upside targets. So I'm maintaining a bullish perspective as long as we stay above that. And the reason is a break below 193, which I'm not expecting. I'm not expecting a break below 193. But if that happens, it would increase downside risk towards the lows of April. But again, I see that as a lower probability. I'm looking for higher levels to come in Tesla. So let me show you this chart now. All I want to say now, I want to keep this short and brief. Notice the next resistance levels. By the way, I want to get rid of this regression channel. We don't need this anymore. I'm looking at a logarithmic chart of Tesla here. And again, my projections and the Fibonacci levels I'm looking at here on the chart are all logarithmic Fibonacci levels, because with some charts, like especially with volatile stocks and markets, like crypto and Tesla, things like this, logarithmic levels make more sense. So take a look over here and notice Tesla is coming to some important levels of resistance, as you see here. And by the way, one more thing before I forget, Tesla is also getting a bit overbought. Notice that the RSI, 21 setting of RSI is now overbought. Okay, now that does not necessarily mean it's going to collapse, no, but it does give us a warning that this is getting a bit overextended and overbought here. So the risk of a pullback is now increasing. And I think I'm going to show you the levels where I think we might see a pullback, although the pullback may start sooner. But my point is that this is we always have to pay attention to the risk levels. Like, for example, when RSI becomes overbought like this. For example, notice that when RSI became oversold here, and I warned about this, you may recall back in I think it was January or December of last year. So notice when Tesla became extremely oversold, you see this here? I warned about this, okay? Because it came so oversold, and in fact, it was a record oversold region, okay, at that point, that there was a high risk of a reversal, of a sudden bounce, okay? The same thing is happening now. We are now seeing overbought conditions on Tesla with RSI 21 setting now, as you can see, above. It's going above that region there, above 70, I think it is. And, well, it doesn't mean that Tesla has to collapse, but it does mean the risk of a pullback is now increasing, okay? But here's something else I need to mention here. If it is correct that we're in a wave 3 of an uptrend, there is something we need to appreciate, that often in a wave 3, if this is, for example, 1, 2, and 3, the third wave pushing higher, okay, if this is a wave 3, usually in a wave 3, the pullbacks are shallow. In other words, the pullbacks usually are not very deep. Sometimes in a wave 3 pullbacks, they just go back, they retrace back to the 21 moving average on the daily chart. By the way, before I forget, notice how beautifully this was 100% projection. Have a look at this. If you measure this initial drop, and I mentioned this in my previous video, by the way, in I think it was in May. This initial drop, which was a likely A wave, was symmetrical with this drop down here, with this move down here. This dashed magenta line was the 100% projection, by the way. Okay, so beautifully, a nice, again, as I mentioned before, a nice A wave, B wave, C wave, and usually A waves and C waves are equal in length, typically symmetrical. So what are the next projections? What are the next likely targets for Tesla? Well, as I mentioned, as long as Tesla can maintain above 210 near support, then I think we could see the momentum continue pushing higher to these levels. Okay. By the way, the reason I mentioned 210 is because if we were to break 210, it means we might see a pullback before we get to those levels. So I think it's more likely that we're going to get to these levels anyway. Okay, my upside targets are between 242 to 250. All I'm saying is that as long as Tesla stays above 210, approximately this region here, okay, I think the momentum and the path of least resistance stays with the bulls for now, for us to test this region here in the next, probably the next few weeks, between 240 to 250, and I'll show you there's another target above this as well. But what I'm saying is if Tesla were to break 210, then probably we're going to see a pullback to this region before we go up to those levels. That's the reason I mentioned 210. So I'm always trying to examine where the risk is located. So bottom line is, I think that this is the level we're going to test next, this zone. Okay, I'm never looking at just one line on the chart. I'm looking at a zone. The first resistance, by the way, is the brown line you're seeing here. That's 234. That's the 2.618 extension of the initial waves 1 and 2 here. And our next projection, if you zoom out, and let me show you. Okay, so if you were, first of all, if you were to measure this entire decline from the highs we made in 2021 to the lows we made in 2023, then the 61.8% retracement is that red line you see on the chart. That's about 242. Okay, that's the logarithmic golden ratio, 61.8% retracement. Okay, and that's not all. So apart from that, there is also, as you can see, a magenta line on my chart, or a purple line, and that's if you were to measure this decline. I believe I've measured it from here. So if you measure this decline here, then that purple line gives you the 78.6% Fibonacci retracement at about 246, I think it says, yeah. So this region, and by the way, 250 is the psychological resistance. So my higher probability is that as long as Tesla stays above 193, okay, again, remember, 193 is the key support. Key support. It must stay above that to maintain the bullish perspective. As long as we stay above key support of 193, I think eventually we're heading towards this region between 242 to 250. I'm sorry if I'm repeating this point here, but it is important because that's an important critical resistance. at about this region. I think at that point we could see a pullback. By pullback, all I mean is we could come back, like from this region, we might come back and test prior highs, this level here, or this level here, or even the 21 EMA. The 21 EMA is going to catch up with the price, by the way. This is the blue line you see in my chart. That's the 21 EMA. So watch that, because if we see a pullback, then it might test that 21 EMA, which remember, it's a moving average. So this blue line is going to catch up with the price. It's not going to stay still. So this blue line, as you know, is going to keep moving. This is going to keep moving up and up and up, and it's going to catch up with the price. Okay, so bottom line is, yeah, I think that's where we're ultimately going, in the 250, 242 region here. But if Tesla does not pull back from this region region of resistance, in other words, if it just pushes through, above a 250 region here, that means it may extend to the next level of resistance in this region that you're seeing here, 275 to 268. 268, in case you're wondering, that is the non-logarithmic symmetrical projection. In other words, if you measure this initial rally and you project it from this low, the standard non-logarithmic or linear extension would give us 268. Okay, that's symmetrically to that level, 268. And 275 is a psychological resistance level there. Okay, so in other words, keeping it simple, that's where I'm ultimately seeing Tesla going in the next few weeks, assuming it does not pull back immediately, but that's where I think is likely going. As long as we stay above, again, keeping it simple, as long as Tesla stays above 193, key support, very important level, it must protect to keep the bulls in control and keep the momentum and the trend to the upside, then I think it's more likely we're going to test this region, 242 to 250. If Tesla pushes above a 250 region here with strong force, then it may extend to the next upside projection, 275, 268. And again, remember, that's only as long as we stay above 193. All right, guys, what we have here on the charts. Thank you very much indeed. Bye for now.